Hello everybody, I'm Aaron Norris. It's February 15th and this is the Norris Group's Real Estate Headline Roundup in 2. First up with some headlines, the National Association of Realtors says that 88% of 152 measured metropolitan areas saw an increase in median price in the fourth quarter of 2012. The West, of course, saw the biggest increases. Not only that, the national median home price increased year over year by the most in 7 years. TransUnion says mortgage delinquency rates decreased for the fourth quarter in a row to 5.19%, which is a 14% decline in delinquencies. Payroll taxes increased in January, but not consumer shopping, which still increased 0.1%. And foreclosure starts are at their lowest in almost 6 years, according to RealtyTrack. The Responsible Homeowner Refinancing Act of 2013 was introduced by Senators Robert Menendez and Barbara Boxer. The intent of the bill is to create more competition by leveling the playing field for new servicers and create more alternatives for qualified homeowners to refinance. The bill seeks to extend the HARP program through 2014 with a change that allows consumers to refinance without employment or income verification. Seems a little strange, but the borrower would have to be current on their loan. Goldman Sachs reported that despite activity in the housing market showing tremendous signs of growth last year, employment is still down. Jobs in the residential investment area are at 2.6 million, 30% below what they were at their peak in 2006. CoreLogic studied over 2 million loans and concluded that under the new and impending rules for qualified mortgages, almost 60% of loans written today would not qualify. However, it reduced 90% of the risk. Well, at least they've got that. The consumer can now challenge underwriting for the life of the loan. Underwriters will want to follow the QM rules so they attain safe harbor status. In short, it just means if you follow the rules and you get sued by a consumer, it won't be that important and hopefully not as expensive. Underwriters have to verify employment, income, ability to repay, and debt-to-income ratios, and certain product types will not fall under the safe harbor rule, like negative AM loans or balloon loans. But don't you worry, the CFP is not done yet. They still have to release the qualified residential mortgage rules, hopefully coming up soon. So the FHA has been labeled high risk by the Government Accountability Office due to its rapid expansion in the area of mortgage finance. The GAO explained that the FHA single-family loan insurance portfolio was at $1.1 trillion in 2012 compared to just $300 billion in 2007. Wow, that's a big increase. The GAO also criticized the dominance of Fannie and Freddie in the market, likely wanting to see more private capital, but what are you going to do? That's it for the headlines this week, but as you know, there are many more headlines on our blog at thenorrisgroup.com/blog. Up on the radio show this week, we've got Leslie Appleton-Young. She is, of course, the chief economist over at the California Association of Realtors. Upcoming events include February 21st, we're doing Poised to Pop at the OC RIA. February 26th, we're going to be doing Inland Empire Investors Forum. February 28th, we're going to be in Phoebe, Long Beach. And March 5th, we've got our new Distress Boot Camp. This is the second one that we've been doing since the start of the year. Have you checked out our new lower hard money lending rates? You can do so at thenorrisgroup.com/hardmoney. We've got 5 programs to help you out with whatever you're doing in the marketplace. Or if you're looking to make a passive 9%, you can always check out tngtrustdeeds.com. And with that, have a fantastic weekend and we'll see you next week.